All right, what's going on, guys? This is Michael Jones, better known as Iceberg from the QuantVue Discord community, coming back here with another um, learning and educational video for everyone to consume here. And right now, we're live on the markets here. It's August 23rd, 2024, around 1:08 p.m. Eastern Standard Time. And quite a bit this week I've seen on the Discord where we have had individuals, having a desire to want to trade QuantView on the 1 minute time frame. Um, as everyone knows that's familiar with QuantView, it's optimized for Renko bricks as well as 1 second data, which is how it looks if we were to change it here, right? So the data is being fed into the bricks each second. So it's not a time frame per se, but TradingView, in order to get the 1 second Renko, you have to have the premium subscription, which can be a little bit pricey. I think it's about $49.99 within the United States, and I think I've even seen higher prices internationally, as much as either 79 um, or even $89. I don't remember which one. So, what I wanted to do for individuals that were looking to stay either on the essential or plus plan of TradingView, it allows you to use the 1 minute time frame as well as, of course, using QuantView if you're a membership, reoccurring, or a lifetime viewership. And I just wanted to show some things that you would need to look for in order to still be successful trading, right? So let's go with the details for our charts here first. We're still on box Renko 2, which is going to be here. You just go to more and settings, and then here you change your box size either 1, 2, 3, or 4. QuantView typically recommends it being 2, 3, or 4. I have mine set at 2, but I always recommend what you prefer to be set for. And for the tools here, we have Q Pro. We have our SMC indicator, which I use to always know what my swing high and my swing low is. We have the consolidation zones indicator, which gives you uh, areas where you should not consider entering, like this shaded red and green here, this red and green here, this red and green here. And if you can see it, this red and green here. And then also we have the squeeze relaxer and ultimate reversals. So the squeeze relaxers are going to be these yellow, red, or blue diamonds on the chart. I'm not seeing the blue one, but typically it's yellow, red, and blue. The colors don't mean anything, but the squeeze just means that price is being squeezed. And if it's at the top, it typically means that price will go downward. And if it's at the bottom, it typically means price will push upward. So you keep that in mind. And then we have our ultimate reversals here. So if you're on a chart for box size 2, 3, or 4, whenever we see very high pressure going downward, you'll see these orange flags form, right? So if you didn't decide to get in this trade right at about 19,728, just for example, on this area of 19,725 or 6, and you begin to see these flags, price is typically telling you with that indicator that it's going to reverse soon. Whenever I see these, if I haven't entered the trade yet, the smart and disciplined thing to do would be to stay out, right? Because we don't know when it's going to form upward like it did here. Now, this is an awesome trade to take during this time period because it went from 19,728 all the way down to 19,678, which is well over 50 points, right? But it's better to be safe than sorry, right? Start seeing these, and your thought is to consider when we start to definitively go upward, right? So that's what these orange flags stand for, letting you know that price is going to reverse at some point, and you want to stay away. Green is the same thing, right? So here's a great example here, which is near, again, we're live in the markets, which is a good point of how close we are to the current time right now of it being 113. So price, after we got this buy Q line here, price began to push up and we start to see these flags. So again, um, for Oracle's reversals, these flags indicate that price is pushing, for this instance, upward extremely fast, right? So if you didn't get in up until this point at 19638, and there was a lot of opportunity to get in at 19622 all the way through 19630, push upward. If you didn't get into that point, then you need to wait until this trade kind of shows itself for another opportunity. And as you can see here, we push up pretty heavily from 19620 all the way up to 19698. And we had a brief squeeze here, a brief reversal here. And if I zoom in a little bit more, you can see the wrinkles where it pushed down a bit. But as I've said before, QCloud should be giving you the confidence that you need to consider staying in this trade if your account has the space to withstand this pullback. And with all the money that you would have made from taking this trade, if you took an optimal entry at about 19624 to about 19659, you definitely should have been able to withstand, um, looks like about a 6 point pullback before we began to push up again to 19695. Unless you decide to just take profit and consider trading another time or shutting it down for today. So back to the point of the video, right? So if I decide to trade on the 1 minute with QuantVue, because the details are going to be different from 1 second data, right? It's going to essentially update every minute. So there's key things that I want to look for, that I'm going to consider, and I'm going to have my stops based on that. So let's look at an example here, and I'm going to zoom in for you. So you can see in real time where it looks like a minute happened and QCloud updated here, right? Letting you know that it was getting more bearish. But just a few seconds ago, that wasn't there. Why? Because again, we're on a 1 minute time frame. But there are a couple keys that you can consider doing that would have given you added confluence to take this trade. I'm going to zoom in a little more so you can see. So if we look here, this is where the squeeze relaxer is. And again, when the squeeze diamond is below price, it typically means that price is going to shoot upward. If we go here and see the red one, when it's above price, it typically means price is going to shoot downward. So how do you play that into your overall strategy on the 1 minute time frame if you decide to take those opportunities, right? So you use these squeezes, and again, this is for what I recommend on the 1 minute time frame. You use these squeezes as additional confluence for your entry, and you place your stop maybe a couple points just below it, right? So once this squeeze appeared here, and with the money ball, we were already bullish and momentum was already going upward. Because we're on the 1 minute time frame and things are not updating as instantly as the 1 second, this is how you take advantage of this particular bullish trade. So again, you place your specific entry around this area. You maybe have your stop a couple points under it. So if this squeeze is not respected, and let's say instead of it going up, for some reason it goes downward, your loss is not too hard because you're using the squeeze as, like, you're making it as, okay, squeeze here, it's gonna go up, and if it doesn't go up, you make it tight enough so where you don't get hit for a large loss, no matter if you're doing 1 mini, 4 micros, or if you have a larger account, you're using higher leverage for your trade. And so you consider that uh, based on your confluences, right? So let's go up here, right? So we see A couple of reversals. We see the green Oracle reversal because we were pushing up heavy, but then we also see a blue Oracle reversal. That means a general pushback, right? So we're in conflict with Moneyball and momentum because it's still telling us to go upward. So, you know, we tighten our stop or we get out of this trade, right? And, it's going to be up to you. And as you can see live, uh, the blue Oracle reversal let us know in real time that it was coming down. And what did we also see? We saw another squeeze. And where's the squeeze? The squeeze is on the top of price. And it began to fall even further and further. And if you can see the wrinkles here, they're translucent because they're in between the Q bands and Q cloud. Um, but that's essentially how we play it, guys. So, because you're on the 1 minute time frame, if you want to be on the 1 minute time frame, or if you're not trying to pay the 49.99 monthly TradingView premium price point, or I believe it's 79 or 89 if you're international, you want to use the Oracle reversal and the squeeze diamonds as additional confluence based on what it's showing with Moneyball and momentum, right? So you're gonna have to do a little bit more work on your end because again, we're on a 1 minute time frame. Things are updating per minute instead of per the 1 second data that you would see if you have premium. But the point of the video is that you can still take great opportunities using the 1 minute time frame. You just have to be aware of a few more details so you can have nice entries and take advantage of large opportunities such as this, where we got the reversal and we began to come down heavy, or after we get out of consolidation here and we begin to get a push up, right? But the squeeze relaxer, Oracle reversal, that's going to be your best friend if again you choose to be on the 1 minute time frame. So again, this is Michael Jones coming live to you here from um, QuantVue and the Discord community. I hope this helps. We look forward to providing you guys with many more videos soon. Talk to you guys later. Take care.